The world's financial markets are once again on edge, as a combination of U.S. Federal Reserve signals, China's shifting trade strategy, and sudden oil price shocks ripple through economies worldwide. These developments are raising concerns about stability, growth, and the financial future of billions of people. The Federal Reserve and monetary policy. At the center of attention is the U.S. Federal Reserve. Recent statements from Fed officials have hinted at possible adjustments to interest rates in the coming months. For months, investors had been betting on a pause or even a cut in rates, hoping that borrowing costs would come down. But with inflation proving stubborn, the Fed finds itself in a difficult balancing act. On one side, higher interest rates can cool down spending and prevent prices from spiraling out of control. On the other, they can slow economic activity and increase the risk of recession. The result has been extreme market volatility, with Wall Street reacting sharply to every policy signal. But the impact goes far beyond America. When the Fed raises rates, emerging markets often feel the pressure. Their currencies weaken, imports become more expensive, and debt repayment grows more difficult. For millions of families worldwide, this translates into higher loan payments, rising costs of living, and financial strain. China's trade strategy. Meanwhile, across the Pacific, China is recalibrating its trade strategy. Faced with rising tensions and competition with the United States, Beijing has doubled down on efforts to strengthen domestic industries. New policies have been rolled out to boost sectors such as advanced manufacturing, renewable energy, and semiconductors. At the same time, China is expanding its partnerships with countries in Southeast Asia, Africa, and Latin America. These moves are part of the broader Belt and Road Initiative, which continues to reshape global trade patterns. By financing infrastructure and deepening trade ties, China aims to secure long-term influence and reduce reliance on Western markets. However, the U.S. and its allies are responding with tariffs, sanctions, and restrictions on key technologies. This growing economic rivalry is creating a new form of global competition, one that could divide supply chains and force nations to align with either Washington or Beijing. For multinational corporations, the uncertainty is a major challenge. Supply chains that once seemed efficient are now being restructured, with companies relocating factories and diversifying production. This transition could take years, with costs ultimately passed down to consumers. Oil price shocks. Adding to the global unease are sudden spikes in oil prices. Following recent OPEC+ meetings, several major producers announced unexpected production cuts. The result was an immediate surge in crude prices, catching many governments off guard. For ordinary people, higher oil prices mean more expensive transportation and higher costs for goods. Airlines, shipping companies, and manufacturers all face rising expenses, which are quickly reflected in consumer prices. In countries that subsidize fuel, governments must spend more, stretching public finances and deepening budget deficits. Geopolitical tensions have only amplified the problem. Instability in the Middle East and concerns over vital shipping routes, such as the Red Sea and the South China Sea, have added further risks. Energy traders warn that even a minor disruption could lead to dramatic swings in oil markets. The global impact. Taken together, the Fed's policy shifts, China's trade maneuvers, and oil price shocks are painting a picture of a fragile global economy in 2025. In Europe, inflation continues to challenge households and businesses. Higher energy costs are putting additional pressure on an already slow recovery, raising fears of stagnation. In Asia, economies tied closely to China are being forced to adapt quickly. Countries like Vietnam, India, and Indonesia are emerging as alternative production hubs, benefiting from shifting supply chains. But they too face challenges from rising energy costs and financial volatility. Africa and Latin America find themselves both courted and constrained. On one hand, they are receiving increased investment from both China and the West. On the other, they remain vulnerable to debt crises, currency instability, and global commodity price swings. Market reactions. Financial markets have responded with caution. Stock exchanges in New York, London, Tokyo, and Shanghai have all seen turbulence in recent sessions. Bond yields remain elevated, signaling concern about inflation and borrowing costs. Currency markets have also been shaken. The US dollar has strengthened, while the Japanese yen and the euro have struggled. This makes international trade more complex, as businesses must navigate shifting exchange rates in addition to higher costs. Cryptocurrency markets have seen sharp fluctuations as well. Some investors see digital assets as a hedge against global uncertainty, but volatility remains high. Regulators worldwide continue to debate how cryptocurrencies should be managed, leaving traders in a constant state of uncertainty. What lies ahead? Looking forward, analysts warn that the coming months will be decisive. If the Federal Reserve takes a more aggressive stance, markets may face deeper corrections. If China expands its economic influence further into the global south, the balance of global trade could shift dramatically. And if oil prices remain high, inflationary pressures may persist, prolonging economic hardship. For businesses and households alike, the key will be resilience and adaptability. Companies may need to rethink supply chains, governments may need to adjust policies, and individuals may need to prepare for continued financial uncertainty. Closing thoughts. In conclusion, the world stands at a critical moment. The Federal Reserve's monetary policy, China's evolving trade strategy, and oil market volatility are not isolated events, they are interconnected forces shaping the financial lives of billions. Staying informed, adaptable, and proactive will be essential as we move into the next phase of global economic challenges. That wraps up today's special report. Global markets on edge, Fed signals, China trade moves, and oil price shocks. If you found this update valuable, please like, share, and subscribe for more in-depth world news and analysis. Thank you for watching, and see you in the next update.